Hey there, and welcome to today's daily premium newsletter for March 1st. We end this week a little better off in market cap and a little wiser about the crypto space as a whole. Big takeaway I've seen is how immature this space is. It shouldn't surprise anyone that a blossoming sector that is tech focused and is hard for the average investor to understand is going to have bad PR. But it goes deeper than that. There's a real disconnect between the technical core of the space and the retail investor who has no prior technical experience, especially with something as nuanced as cryptocurrency. PR is meant to be the bridge between these two distinct groups, and yet it seems there is greater confusion and disconnect than ever in this space. I believe this is due to the massive influx of investors who've never invested before, given crypto's lowered entry barriers compared to traditional markets. I think it's also due to the explosion of technological diversity in such a short period of time. 3 years ago, the extent of the market was fairly limited, and generally everything centered around Bitcoin, but that's quickly changed as the market has erupted with options for investors. We anticipate crypto will become more accessible over time, but currently it struggles with even the most basic questions investors ask. Hopefully together we can begin to change that and make the space more readily available as it will need to be for mainstream adoption. Speaking of, there was news today that Liechtenstein-based bank Frick has offered direct investment in 5 separate cryptocurrencies for its customers. Those 5 are Bitcoin, Bitcoin Cash, Ether, Ripple, and Litecoin, which is not surprising given their ubiquity and general use. What's interesting is this provides a direct alternative to the centralized exchanges such as Binance and Coinbase, as what the bank offers customers is a service to handle all processing and storage. Certainly, this would be a very appealing alternative for those not wanting to deal with the actual handling or security of their crypto assets. It begs the question of whether a similar service will be offered in places like the United States. For example, does the US follow Germany's lead in declaring cryptocurrencies as not taxable for purchases, as they did yesterday? We'll see, but in the meantime, we'll continue to watch the market grow and mature as we expect it will. Talk to you this weekend. Now over to Doc.
Good evening, folks. This is Doc for ReadySetCrypto, and we just actually, as I started this video, we just flipped over to the next day here, UTC. So not a bad day so far for Bitcoin here. Not a bad day for Bitcoin, and you can start to see that forming higher low setup. Now, is this going to have enough oomph to break out above here and above 12,000 and really print that higher high and really start the recovery process? Let me show you how this has occurred in the past, and you'll see what I'm talking about here. So let's go back over some of these corrections that we've had over the past year or so. Here's 2017, the first one that we had. Big red bars to the downside, and then what happens is we start to see price put in, consolidation, breakout, consolidation, breakout like this, okay? Next correction hits, and then we go through the same process again. And you can see it a little bit more clearly here. Breakout, consolidation, higher low, higher high, the process repeats. And here's where we go a little bit parabolic as we get into May of last year. Next correction, drops down, breaks out. Here's the disbelief phase. Higher high, higher low. This is what we're looking for. Higher low, higher high, and then the pattern repeats. Next correction, breaks up, higher low, higher high. The price continues to build on top of that. So back to today. Is this the one? Is this the one? I don't know. I don't know whether it's the one or not, but this is why we do what we do, is we look at trend lines. We look at trend lines that are broken. Descending patterns break to the upside. It's a law of nature, right? If something is working down, eventually that has to break to the upside. Descending patterns break to the upside. Right now, this is showing a higher high, higher low, and this, one of two things is going to happen here. Well, actually more than that, but let's kind of confine it down to one of two things. Either we're going to see the price break out from here, either we're going to see it break out from here, or we potentially will see it just break down into a range. This is what I hope it does not do, because I don't think it needs to do that. So if it just breaks into a range with a series of perhaps higher lows, perhaps lower highs, maybe even built into a small pennant pattern here, you'd think that the price has consolidated enough, is based on the choppiness index here showing a lot of energy. Now, I did get some questions overnight about the CHOP index, so I'll spend a little bit of time on today's report to show you how to use that after we get through the top 10 here. So here is Ethereum. Ethereum has not changed at all. Here's Ripple, has not really changed. We're seeing a very small range, very small consolidation. Here is Bitcoin Cash. Again, not much to really say here. We're looking for something making big movements. Here is Litecoin, and Litecoin continues to just work within a very small little pennant pattern here. So we're pretty much running like that for Litecoin. All right, so let's bring this back. So you can see range expansion leads to range contraction. We're building up a lot of energy again, looking for the next break of this. Normally will break out in the direction from which it came. Okay, so moving along here is NEO. NEO is, oh, it's hard to really call this all that bullish. 2 days ago, it was super bullish, and right now it just can't get out of its own way. So yeah, it did bump its head on the upper Bollinger Band, but it's got tons of energy here. And it just makes me wonder if we're going to see a breakout or whether we are seeing instead just another bear flag pattern. Okay, that would not be good. I don't want to see that bear flag pattern kick in. If that were the case, then what we see is a lower high and the price runs down through there. So watch out for that. That could be the case setting up. This is very disappointing that we got no follow through today on NEO. And guys, I just looked through the rest of the top 10. Here is number 10, which is IoT or IOTA, and this is just going in a pattern. Nothing else is moving. We're getting markets just going very, very dull today. So on the bright side, we had the equity markets sell off quite a bit today based on some potential trade wars, but that's not going to be affected by crypto, which is good. So crypto in some ways is a little bit of a hedge against uncertainty in the equity markets. I've also noticed that with the interest rates rising lately, or the threat of interest rates rising lately, crypto really has not been very sensitive to that as well too. Again, very, very interesting to see how the inner mechanics between markets play out. We'll see whether or not crypto does have the same sort of sensitivity over time. Okay, so let's go back to Bitcoin, because this is by far the nicest looking chart in crypto. And the reason for that is because there's so many people watching the one chart. So I hate to use the word or hate to use the phrase self-fulfilling prophecy, but it sort of does become that. What do I mean by that? Well, if everybody is looking at the same thing, then it tends to kind of create that self-fulfilling prophecy. So in other words, as we printed our first lower high here on Bitcoin, and this was in early January, okay, as the price came up to this trend line, this is the third test of that trend line, and this is where it becomes a lot more accurate, is on the third test. The first test, I mean, there is no trend line until there is a lower high here, but now there is a trend line, and the price came up and just sold down off of that target. That was a great excuse to take profits off of a very nice bottom here. So I don't believe, getting back to the CHOP index, I don't believe in this sort of concept of overbought, oversold. So I could throw some stochastics or some other oscillator on here, and what you would see is that this price would probably enter the overbought zone right around here. And it's overbought, and it's overbought, and overbought, and more overbought, and then incredibly overbought. And it just doesn't really matter, right? It doesn't really matter when it comes to that. So I'm just not a big believer in overbought and oversold. Now, oversold will come into play on a pullback. Oversold will come into play in a pullback because that can create some nice mean reversion type of setups. But what I personally like watching for is high levels of energy on the CHOP index. What this is showing is on a period of 14, this is showing heavy levels of energy. So when we have price going kind of in a sideways box like this, what this means is that this is all very non-linear. Non-linear, it's not going anywhere. So it's very non-linear over that period of time. And that builds up a very large number here on the CHOP index. meaning that's 100% chop or nearly 100% chop instead of a linear trend. Now, a linear trend is going to be something like this, and this is why we have an extremely low level, because this is almost a straight line. You could almost stick your ruler on here instead of, or use this chart instead of a ruler if you wanted to. So my principles to this is that range contraction like this leads to range expansion. Think about this. If you were to run up the side of a mountain, if you wanted to go up the side of this mountain, okay, you are not going to do very well if you just run all the way up this mountain and try to summit on the first day. You will be completely exhausted at some point, and you're going to have to sit down, you're going to have to rest, you're going to have to catch your breath, maybe eat something, drink something, do whatever. Range expansion leads to range contraction. And then once you feel better, off you go again. But you're only going to get so far before you have to rest and then repeat. And this is kind of how markets work. It's really the same kind of thing, is that markets will go from periods of range contraction or non-linear price action, and then they will trend. And they will trend into exhaustion like this. They will trend into exhaustion, then they'll repeat the same process again. They'll go into a period of range contraction where they'll build up energy again, and then they'll run into range expansion into exhaustion once again. This one got very close to that, probably was there intraday. So I find this to be a very accurate way of understanding where a chart is, especially if you use multiple time frames. Now, with a lot of cryptos, we cannot use multiple time frames. They just don't have enough time history to print anything worthwhile in weekly or even monthly charts. Now, Bitcoin's a little bit of an outlier because it certainly does. So Bitcoin, you can see that we've had a nice weekly chart, incredible uptrend here, lower highs, lower lows. And so this is what I'm talking about here, is that Bitcoin, this 12,000 needs to yield so that it can then become a higher high. And then we're going to start on the next leg of the weekly uptrend, which will be a good thing. This should help attract some new money back into the crypto space. And think about all the people, and hopefully it's nobody listening to me right now, think about all the people that began their crypto career by buying into this level and then probably at some point sold into it or are just furiously hodling right now and urging the price to go higher once again. So this is the principle of maximum adversity you've all found about. So this is, do you know that it is actually, I'm not kidding here, but it actually creates more pain to sit on the sidelines and watch a rally go on without you than it does to take an actual stop loss. To actually lose on a trade, you get over it. There's a finality to the event, but sitting on the sidelines, watching a market run away like crazy without you being on board is actually extremely painful. So this is why we investors, we retail traders, we look for these areas, and this is the FOMO period. This is why markets run away like this, because so many people are trying to run after that train and jump on board before thinking that this is the last rally that you'll ever see. Well, who knows? We may get the next one here fairly soon. Just a couple of words on our swing strategy. Again, what we're looking to do is we'll go down to a 30-minute chart on the big four. So that's going to be Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. We're going to look for opportunities. And it may make sense to use Litecoin just in case there's any stops involved with this. But what I'd like you to do is, if you're interested in trying this, use a very, very small position. So maybe something that's only worth 20 bucks. So what you can do is you can create a fixed risk position. So there is no stop to it. And then simply target the upper Bollinger Band in this case. So we're not going to be shorting these. We're not going to be setting up short trades. We're going to be looking long only. And the target for this, well, the initial entry is going to be a close below the lower Bollinger Band, right? So that's our signal, that's our trigger. And then soon as the price rebounds and closes inside of that, that's where we enter. That's where we enter. So it looks like this entry was about 24 hours ago. About 24 hours ago. Just as the clock ticked over into March UTC. And what we're going to do is we're going to target the opposite Bollinger Band. Now what you can do, this is more of an advanced technique, is you split the position up into halves or thirds, and then you get risk out at some point here, and then you trail your stop above here. And this is how you can get into some longer term swings. But always the key here is to get a good entry and not let that position get red out of the gate. Again, if you wanted to use something like 0.002 Bitcoin or 0.1 Litecoin or something like that, you're going to limit the position to about a $20 position, and that's what I would start with. Start with something really super small like this and understand the mechanics, how to trade this. Understand how to become mechanical, understand how to limit the costs to this by using limit orders. Again, I'll spend more time on this. Unfortunately, this week has not been very good in terms of my ability to enter any of these trades, right? But this is what we're going to be looking for. So that is Bitcoin. Here's Ethereum. Ethereum, there's a good entry right there, and this is right around the same time. This was last night around the same time. And so right now we have a little bit of an uptrend. We're going to look for the next dip back down here. Hopefully this is not going to, this is pretty choppy stuff, so this is not exhausting by any means the trend strength. Although Ethereum is just not going anywhere right now. Here's Bitcoin Cash. Bitcoin Cash has been running around a little bit. Here is really the only entry that we've had, and this one really went nowhere for quite some time. We've had no excursions outside of the Bollinger Band recently. And then finally, Litecoin offered a nice, this was a nice entry, again, last night, about 24 hours ago. And it looks like, there we go. Actually, there's an entry right here and right now. So I may look to do this as soon as I finish recording this video. See if I can enter a very small position with Litecoin here and see if we can target the upper Bollinger Band, which is going to be right around where this little Litecoin pennant pattern is. You can see that trend line there. All right, folks, this one's getting a little long in the tooth, so let's cut it off. And we will talk to you this weekend. Look forward to that. Take care, folks. Have a good Friday.